Hello everybody and welcome to today's next presentation here at Carnegie. We are now joined by Magnus Larsson, who is CEO of Pricer. Welcome, Magnus.
Thank you very much.
And after the brief presentation, we will have a Q&A where you can submit questions that will be answered by Magnus. But I leave the floor to you.
All right, excellent. Thanks a lot. I'm very happy to be here. I will do the presentation in English. Jag gör det på engelska idag för vi använder också filmerna för vår internationella tittare. So I'll continue in English, but if you have any questions in Swedish, we can take it afterwards. Super happy to be here. Thanks for having me. I will speak about Pricer. How many of you know Pricer since before or have heard of us? Quite a few. You probably heard good things. You might have heard less good things. So today I'm going to give you the idea of Pricer as of today. And if I get this one right. I talk a lot, so I will skip a few slides to make sure that I focus on the right ones. I want to start with retail and the retail world and what is actually the challenges for retailer if you have your own store in Sweden or UK or elsewhere. I used to say that the main thing was inflation. You need to change prices often. Of course, then you added the availability of staff. We can see that today's retailer, it's quite hard actually to get people to work in the store, and if you actually manage to get your staff in the store, it's quite hard to actually make them stay because there's a lot of competition for the staff and there is a lot of other options for many people. In some markets there, like the US, they can't even get staff, so if you go to a store in the US, it's not uncommon to see that they have to have only one or two tills open where you can pay. There might not be any staff in the store, so for them trying to address this is a must. The cost of staff, we see that also standardization. There is a certain way of working. Now environmental questions in Europe specifically with a new directive on how to work with sustainability. Competition, of course. The traditional grocery retailers, which is one of the biggest chunks of retail, they are now facing a lot of competition from what we call the hard discounters. So Lidl, it could be Aldi, and there are quite a few that are focusing on actually doing very low pricing, putting pressure to the more traditional retailers. They want to find new business models. How can they make more money in the physical store? How can they make their shoppers spend more money? How can they find new revenue streams from the brands? So suppliers like Procter & Gamble, Coca-Cola, Unilever, how can they actually get more of the money from the marketing side from the physical store? They're also quite concerned with how they can create some kind of an online experience in the store. If you're on an online platform, and this is maybe a little bit less grocery, but other areas, you want to know exactly what the customer or potential customer is looking at, what they pick in the basket, what they put back, and many retailers want to do exactly the same thing in their stores. Imagine you're selling mobile phones. How do you know which model has been the most popular? Today it's virtually impossible. So we speak to people and say, well, maybe if we could have a sensor attached to the phone so we can feel the motion, we know which of these phones were lifted the most times. So all these things are challenges that are the modern retailer are facing. Maybe finally also shopper experience. How can we make sure that coming to the physical store is something positive? Where you get what you want. So whatever product you want to buy, you'll find it on the shelf. The experience in the store is nice. Ideally, I think all retailers would want the shopper to go there. They buy a little bit more than they were planning. And at the end, they're so happy that they take another round in the store. Well, that's probably dreaming, but that's sort of the direction that we want and the retailers want to go. So what is the solution? Wrong. For many, it's store digitalization. How they use IT in the store to be more efficient. So basically making sure they can do more work with less staff. They want to see how they can get the customer experience better. How can they really improve the customer experience in the store and the shopper experience? They want to see how they can actually make the shopper spend more money. They were planning to buy 1,000 krona and they end up buying 1,200 krona. How can they make sure that they capitalize from all the commercials in a different way in the store? And that's what we do. We are part of the store digitalization. We are one of the key puzzle pieces or jigsaw pieces in the digitalization in the retail store. Typically, most retailers, they would start, well, I want to modernize the place where customers place the till or the cash point place. It could be self-service. It could be just be that it's modernized. Then they want to look at the logistics systems. They look at the back office where they can actually do the pricing. Next step is to typically look at the way they present the products. It could be shelf labels. It could be digital advertisement. It could be any communication on any screen. And next step, once they've done that, is to look at, now we have everything in the store. What else can we do? Should we add cameras in the store to see if there's something on the shelf? One reason for customer to leave a store is that they actually plan to buy the specific product and they cannot find it. They will go to a different store, and the risk is that they will actually never come back to your store. On the other hand, if you actually manage to have the product they want, chances are that they will actually come back next time as well. So that could be one thing. And then, of course, they want to know, how are people moving in the store? Do we have the products at the right place? So there are many streams that we can see attached to this one. And we are sitting as, in my point of view, of course, the mantelpiece in entire digitalization. I'm pretty sure that there would be more people claiming the same thing. But the thing is, what we do is fundamental. We are putting pieces primarily then displays for pricing, but also to help directing the staff to make their life easier. That's the basics. So that's what we do. But who are we, for those of you that don't really know? We've been around for a long time in Sweden. We were founded early 90s. We were listed on NASDAQ in 96. We have roughly deployed 25,000 stores globally with our technology and our products. We produced the electronic price labels. That's the biggest seller that we have. And we delivered more than 310 million of these labels. It's probably more than 330 million by now from the beginning. And many of these have actually been sold and delivered over the last 10 years. So we have seen an acceleration here. We do roughly 40 to 50 million labels a year now. Our vision is to become retail's first choice in terms of store digitalization and communication. And to me, that goes a little bit beyond the technology. We want to make sure that when a retailer speaks with us and compare us to our competitors, that they feel that we are their first choice in every single interaction with them. They feel that our salespeople are more responsive, that there's better quality of our offer, that actually what we deliver is something they perceive as premium, and they're really happy with the products and the solutions. But also when they get the first invoice and it was wrong, that they feel that we were better in actually taking care of it. Or if there is something not working, that they feel that the response they get from our support team is first choice. And we believe that, also from a feedback point of view, when I speak with customers, when I speak with some of my colleagues and ask, what do you think our customers value the most? Many of them would say it's our technology. It's the best technology on the market. And it might be. It's of course a matter of opinion. I do believe that they're right. But every single customer that I've asked, the first thing they bring up is actually the way we engage and the team that we have. And that's something I'm really happy, because regardless what happens in the market, that's something we can actually, of course, continue to use as a key value. And to me, that's being retailer's first choice. And of course, I hope that will generate business. And I would like to be the first choice in every single market, but we're still a comparably small company, so we cannot invest enough time and resources on every single market. But we want to be, if the retailer, if they have the budget they want and we are willing to address it, they should select ourselves. That's the target. So what kind of customers do we have? I tried to do a sample here of different kind of customers to give you an idea. We have an exclusive agreement with Carrefour, which is, I call them a global grocery giant. It's one of the largest grocery retailers in the world. We started working with them in 2004 and got now an exclusive agreement with them last year for 3 years, with a focus initially on France, Italy, Belgium, Spain, Romania, and Poland. but also a little bit closer to Sweden. We won the co-op stores in Finland, the S Group. So we got a frame agreement with them last year. They have 1,000 stores. They were willing to commit to 300 stores. They've almost all deployed now, and we got an order for another more than 100 stores. So here we have, it's like Coop in Sweden. It's the same corporate family, but it's the Finnish corporation. Brico Dépôt, they are do-it-yourself, just like Bauhaus, that is quite famous here in Sweden. They are a large retailer or do-it-yourself retailer in France. They belong to the Kingfisher Group with retailers or with stores in quite many different countries. In North America, Canadian Tire is probably unknown to ourselves. And when I heard about them the first time, I was thinking car tires. Well, that was the starting point. Nowadays, they sell pretty much anything. If you have lived in Canada or if you've been in Canada, this is the place where people go whatever they need to buy. If it's a hockey trunk or if it's car tires or if it's screws, this is where they end up. And their aim is that every single Canadian should not have to travel more than if it's half an hour to actually come to a store. So we have done a lot of the stores. Actually, all the stores, they have our infrastructure implemented, and they are now gradually deploying with intention to actually do all their stores by end of next year. So I think we've delivered 20 million labels so far. And finally, also from the North American market, home electronics. Best Buy is number one in home electronics in the US. We have all the stores in US and Canada, so it's 1,100 stores that we've sold over the last couple of years. So it's customers that, of course, I'm very proud of. But still, even though these are great names, there are a lot of customers that haven't done anything yet. So looking at the penetration rate of the market, it's been like a very long early adopter phase where something happens, not enough. But now we can see that we reached an inflection point where the market seems to be growing very fast, and there are a few markets driving it. And I think I will come to that a little bit later. Let's see if I remember right. Why is the market taking off? I spoke about the transformation. Of course, from a retailer point of view, you want to get your cost down and efficiency up, but there's also this element of being able to make more money. We've been really good in the cost efficiency part, and in the focus of the company on forthcoming products will very much be also focused on how can we help them make more money and not only save money. And on the market side, it's low penetration globally. We believe that the penetration on the addressable market is somewhere around 10%. We can see that some markets have actually started to grow quite fast. The first markets to grow fast was France. We have seen it in Norway, we've seen it in New Zealand. Typically some of the markets where you've had quite high labor cost or lack of resources, or a generally high level of digitalization, IT, high level of IT deployment in the countries. But we now see that markets like UK, US specifically, there is a lot of attention, and they have been very slow. I've been trying to figure out why actually. It's a bit unclear, but now we look at there are a lot of drivers that actually make things happen on these markets. And I think that the UK market, it's a very clear shift. 2 years ago, I was at the Retail Technology Show in the UK, in London. It was empty. There were hardly any soul in this place. It was like a ghost town. The year after it was full, and this year it was packed. 2 years ago, none of the leading retailers, none of the tier ones, none of the tier twos were discussing digitalization. After Brexit, everything virtually changed overnight. Inflation increased just like in the rest of Europe after COVID, but in the UK it was sort of higher and more persistent than in the rest of Europe. All of a sudden they had no staff. Many of the people that normally came to UK to work could no longer come to work, and you could see the result in the shops. Then they've also changed now the legislation, so they increased the minimal wages. Even though it's a really good thing for the people working in the stores, it has actually been driving costs for the store owners. So now we can see, if you take the top 5 retailers, grocery retailers in the UK, Tesco, Sainsbury's, Waitrose, Morrisons, Asda, they all look at ESL, and that is a major change. We know that some of them are already set their budget, some of them are doing test installations, some of them are planning to do it, but it's a very clear trend. And we actually believe that the very same thing is now happening in the US. For those of you that have heard me speak before, you know that I've been speaking about the US market. Now we can see very tangible steps towards it. It's something happening. And I think the biggest one was the announcement from Walmart, where our competitor won a major, almost 2,500 store deployment. But to me, that was fantastic news. I even texted the CEO of the competitor and said, congratulations, but congratulations to ourselves as well, because they just opened the market. So now we can see that the other large retailers in the US, they're also all talking about ESL. I think they're a little bit behind what we see in the UK, but we can see that the key ones are now addressing it and discussing with it. We are getting requests. We are asked to be engaged in discussions, and we can also see that they ask us to test our technology, and some of them have already started, but in a smaller scale. Now for those of you that do know us, and maybe not from the positive side, I think it's also important to say what kind of company Pricer is today. I had the privilege to be nominated acting CEO in 2022. And at that time, I've been with the company for 3 years. And I felt that there are a lot of changes needed. I could feel that we're not addressing the market in the right way from a sales point of view. I felt that our R&D did not produce products fast enough. And the product team did not actually get the compelling packaging. And as a result, we were losing market share. It was very clear. In 2021, we lost a lot of market share. So we had to address it. So I made some changes to the management team. We had a capital market day in 2022 to say that this is now the way forward. We need to grow. And I know that there were a few areas that didn't work properly. And I addressed those. So we could see that there's a clear growth between 2021 and 2022. But we were also tying a lot of capital. We can see that there were other parts of our organization that were not catching up. In that case, it was the supply chain. It was also on the financial side. And it was clear that we would need to strengthen our balance sheet. So that was the second phase. How can we make sure that we have the money to grow the company and make sure that from an investment point of view, that we are a good choice for anyone that want to invest in the company. So that was the phase 2, which by last year, as you might know, we had a new share issue. And after that one, we said that now we have a strong balance sheet. We have a very positive situation. We also addressed the gross profit and gross margin that was way too low. We made a lot of changes. We changed on the development side the way we design our products. We designed them to be easier to manufacture. We designed them also to be cheaper to manufacture because there were a lot of different variations. We had too much variation in the product portfolio, so we started killing products and taking them off the portfolio. We started to increase pricing. We started to negotiate in a different way. And all this has, in parallel, increased our gross profit. So I think we were down at just about 15% gross profit, which is horrendous in Q4 in 22. And now, Claes, what did we have in Q3? This is our CFO, Claes, by the way.
Yeah, now after Q3, we are close to 22% in gross margin.
So it's been a major increase, but it's also been an important and necessary increase, and it's been a lot of work. And of course, that's something we will continue to do because we still see that there are things that we can do to address it. And maybe the third phase was starting to do a transformation of the company, because one thing that was also visible when I started as a CEO was that our cost levels was too high. So we spent a lot of time actually looking at how can we change it. But I know that we had to make some pretty hard decisions, which we did in December. We announced a restructuring. We took the cost level down. Or announced that we would take it down with 50 million Swedish krona annually. In Q3 now, I was happy to announce that it's been done. We actually met the target. We have actually reached what we achieved. But of course, unhappy that there were a lot of good people that had to leave. But we also realized that we had to make a capability shift. So we had a lot of good people that was probably not in the right position to take the company to the next step. And then we have started transformation. How can we make sure that we do not build cost the same way as we did before? And also here we are making a lot of good process. So I think that phase 4, that's where we're right now. We strive to make sure that we have long-term profitable growth. So it's a lot of focus around the operational excellence. Right now we're into a really exciting strategy round, but that will be something for another presentation. From a financial point of view, here you can see the development, in this case, the order intake, net sales, gross profit. We have started a trend that is going in the right direction. And I think above all, I'm really happy to see that the gross profit is going in the right direction. Of course, a result of the all the work that we've done on the gross profit side or gross margin side. But I think also, as you can see from this one, we are now making money, not only EBIT, but also good net profit. And that has been the combination of gross profit, gross margin, adjustments to the organization, but of course also work that Claes and the financial team has done to make sure we improve on the net side, on the financial side. So this is pretty much where we're at today, and I'm so ready for the questions. Tell me if I'm too slow.
Thank you. No, the timing is excellent, actually.
Excellent.
So there's plenty of time. So I guess if we start off with the Americas.
Yeah.
In this market, a lot happens, of course, in the ESL segment, but also, I guess, in a wider sense. So could you just elaborate a bit, what prospects do you see in the US or in the Americas? I mean, you touched a bit on it, but maybe you could dive into it a bit. And then on the other side, do you see any risks or opportunities relating maybe to the outcome of the election? Something on that end, please.
So we see a lot of opportunities. As mentioned with the Walmart announcement, we see a market that's taking off. We know that Target, Kroger, Albertson, H-E-B, on the grocery side, they're all looking at investments. Will it happen now, or will it happen in 1 year or 2 years? A little bit too early to say, but we can see that they are taking steps that they did not do before. We see it also within pharmacy. We see it within do-it-yourself. And the market is massive. If you look at two of the large do-it-yourself retail corporations, you can call them, Ace Hardware and True Value, together they have more than 12,000 stores in the US. And compared to Sweden, we have a customer called Associated Food Stores in Midwest. Have you heard about them? No, I think hardly our people in our Atlanta office know about them. Turned out that they had more than 500 stores in two states or 3 states. So to us in Sweden, it would have been a very large retailer. In the US, they were hardly known outside their own states. And there are a lot of this one. I would say there's probably somewhere between 50 and 100 retail chains just on grocery that would be interesting from our point of view because they are so large. So it goes from Walmart with 5,000 stores, then you have Kroger with 3,500 stores, down to chains that are hardly known outside part of their state that might have 100 stores of large size. So from that point of view, there is a lot of opportunity. We see that they have the lack of workforce. We see that they've had inflation, but above all, there has been salary increases. That's made it difficult for them to get people to work in the stores. So the market is absolutely there. And the interest is there. On the potential import taxes, if that happens, and let's assume it does, it's hard to say to what extent it will impact. I think we could say that yes, there is a clear risk that there will be an impact in the possibility to do the business. But we can also see that the value that we bring is on a level that, well, it would probably delay the ROI. But there's still, even with import taxes, there is still a very clear ROI to be had. Typically, if we take one of our European customers today, if they make an investment within 18 months, most of them actually have their money back. We had one customer that actually, we got this information accidentally, said that it's actually 6 months. So even with a higher import tax, the ROI case will still be there. We don't have manufacturing in the US, but we have a manufacturing concept where we could actually transport to the US market. Setting something up would probably then on the other hand take somewhere between 12 and 24 months, probably more like 24 months. But it's clearly feasible. None of our competitors are having factories in the US, so I think we would all be on the same level.
Thank you. That's very clear. And I guess we move on to the product offering and Pricer Plaza. You have mentioned that some 3,500 stores currently have Pricer Plaza installed, looking at the entire install base that you have. What potential do you see among current customers? And could you just start by briefly explaining Pricer Plaza to us?
So
please?
Pricer Plaza is a platform to manage the stores. It used to be a PC-based solution that you actually have in the store. Now, like many other customers, we want to have recurring revenue. So this is a cloud service that we sell as subscriptions, so it's a SaaS service. The retailers were quite conservative at the beginning. Many didn't really want to discuss online services, but that has changed fundamentally over the last 5 years. So now all the new customers that we sell is with Plaza, but we're also planning to migrate our existing customers over to Plaza. So why do we want them on the SaaS service? Well, of course, we want the subscription service. We want the profit that we get, the gross profit increase that we get from having a SaaS service. But it's also key to actually utilizing the premium position we have in the store. So remember from the initial part of this presentation where I spoke about all the stuff they want to do. Well, we have the premium position. So when they say, well, we want to add this functionality, we want to do this. Well, if we have, and much of this will be software based, well, then we have an excellent possibility to either do it on our own or actually, like an app store, offer the possibility to do it through Plaza. So we see that once we're connected and we know that we will have this store for 5 to 10 years at least, often longer, we should make as much as possible out of it. And that's why Plaza or our SaaS services is key to what we do. So you can say we'll sell it to all new customers, but we also try to take all our existing customers and migrate over. So that's something that is ongoing.
Thank you. And then moving on to the supply leadership that you have spoken of. Are you satisfied? I mean, you've done a lot of work in this area. Are you satisfied with your current sourcing of key components? What are the key components? And do you feel that you are supply chain proof, so to speak, currently?
Satisfied is a very strong word. I'm happy for the work that we've done, but I see that we can still do more. And I see there's still a lot of work being done. I'm happy with the suppliers. From a cost point of view, the driver is the display. So in the ESL, we have the display, we have batteries, we have the circuit boards, there's some other components, we have the housing. We are addressing a whole lot of these different areas, and we are looking at the next generation of ESL and the shelf label, and that's still our biggest sales area. And we are planning to do something quite different to what competitor is doing. We have a concept that's actually no longer a concept, something that's in development phase, and we started to test now on certain customers. It's based on design, because one of the things that struck me after some time and in discussion with the customers is that with the way our shelf labels look today, can they properly represent their brand? And since we believe that getting additional revenue streams in terms of the customer representing their own brand or their suppliers doing it, is that possible? And we came to the conclusion, no, it's not really. So in the next generation that we're actually looking at right now, the design, the ability for our customers to show their brand or their suppliers has been the modularity to make sure that we can do more variation with the base set. So here we have some very interesting concept in place. And the third one is sustainability, where we look at what can we actually change in our ESL to make it more sustainable. If you look at the circuit board, it's poisonous. Can we replace it with something else? Battery, we don't want to ship battery if we don't have to. The plastic, could it be replaced to something that could be like cellulosa based? So all this stuff is things we are looking at. Some is quite early, and it's on the research phase where we work together with some Swedish companies, and other things are actually getting more tangible. But these three things, the design, modularity, and sustainability, is really key, and we believe that will be the future of the ESL.
That's great. Very helpful. Thank you so much, Magnus and Claes, for coming here today.
Thank you very much.